Okay, so let's start today's session. Those of you guys who just joined us, a very warm welcome. So for today, we are covering on RSI swing trading strategies. So just a quick introduction of myself. I'm Lee Sing, right? If you guys are going through a recorded version of this, right? If you have any questions, feel free to reach out to me on LinkedIn. Just a quick disclaimer, the information presented here, it's not to be treated as investment advice. It's for educational purposes only. So this is the agenda that I'll be covering for today, right? So first we will take a look at the RSI basics, right? So this is a quick recap from our previous sessions, basically trying to take a look at what we can use, how we can use RSI, right? And how we can interpret these zones, be it in the overbought, oversold bands, and at the same time, right, how we can potentially trade or get trading strategies from them. Following which, we will take a look at RSI divergence trading, right? So for in-depth session, right, you can take a look at the previous recording. So for this is just a quick summary of what we have covered thus far, right? So for those of you guys who missed the previous session, so we'll cover a bit more on what RSI divergence is. We will take a look at a few examples on them. So in general, for divergence, right, there are two concepts that we can take a look at, right? So one would be the bullish divergence, and the other it's the bearish divergence. So basically what this two means, it's that for bullish divergence, we are looking at this pattern when prices are forming lower lows and lower highs, generally in a downtrend. Whereas for RSI, it's forming higher lows and higher highs. This shows that there is a change in momentum, right? And this downtrend or this downside pressure might not hold. So that's one, right? Whereas if you're looking at bearish divergence, it's the other way. We want to see price climbing higher. But at the same time, right, on RSI, we want to see that prices are forming your lower lows and lower highs. So this is bearish, right? When price forms a higher high, but your RSI is forming a lower high. Okay, so these are the divergence we will be taking a look at. We will also take a look at how we can combine market structures and divergence, right? So in general, when we spot divergence, right, we want to look at the overall direction of the trend as well. So for bullish divergence, it signals a reversal, right? It shows that prices are potentially showing a reversal. We could see potential to the upside. But of course, along with that, right, there are two things to note. One is that your RSI and the bullish divergence, right, RSI has to be in the oversold region, right? Whereas if you're in a bearish divergence, RSI is in the overbought region. So this makes sense, right? If you think about it from how prices are like, right? So if price it's pushing lower, right? So you're seeing strong trending market pushing to the downside. In such cases, right, usually what happens when you take a look at RSI is that RSI will stay in the oversold region for prolonged periods of time, right? So you can see a case where prices are just moving sideways, or rather the RSI moving sideways, exiting, and then entering this oversold region again. But along the way, right, if you see that prices starts forming your lower lows here, right, but momentum or RSI over here is showing that it's forming higher lows, right, then this is the first sign that prices we could be seeing a sign of reversal. But of course, right, you can see that if you're in a downtrend, right, what happens is that usually price will continue to the downside. The highs are usually not violated. So apart from just using RSI, bullish or bearish divergence as a signal, what you also want to consider is to look for that change in structure on your higher time frame, right, or even on the lower time frame, especially if price comes into a demand zone. So if price comes into a demand zone and you are seeing that change in structure happening on the lower time frame, then this suggests that this RSI, right, there's a higher probability that this reversal might happen. Okay, so we'll take a look at examples on that on TradingView in a while, right? So that's on market structure. Likewise, right, if you're in an overbought region, right, you see that prices are pushing higher, and in an uptrend, price will stay in overbought region for prolonged periods of time. That doesn't show that it's a reversal, because if you take a look at just market structure, in an uptrend, what happens is that the highs are constantly violated, whereas the lows are the ones that hold. So what this suggests, right, if prices continue forming higher lows and higher highs, in this case, right, if price continues forming higher highs, but your RSI is forming a lower high, then this suggests that there could be a slowdown, right, in the buying pressure. but that doesn't show that it's a reversal, right? This is a potential signal. But again, right, for more confirmation, we need to check our market structure. So if there's a change in structure, there's a break of the last low, you can see that this is the first sign that we could be seeing a reversal. Okay, so we want to combine market structures and divergence, right? Not just trading this solely in isolation. So that's on market structures. And then the next thing that we want to take a look at, right, would be on trendline breakouts. So in this case, you can see that RSI trendline, right, essentially we are seeing, again, we'll take a look at examples, but apart from just looking at overbought and oversold regions on RSI, you can also take a look at the trend lines, right? So trying to draw ascending, descending trend lines to see if when price breaks above or below the trend line, right, then this could suggest a potential breakout. Okay, so let's take a look at examples. Right, so before the examples, right, let's just do a quick recap of our RSI. So this is for those who are not familiar with RSI itself, right? So for RSI, it's basically a tool that's used to measure strength and momentum of price. So how this is being done is that it compares the average gain with the average loss over a defined period of time, right? So this can be specified by the user, right? So default is 14 periods. And once this is calculated, it will be plotted along a scale of 0 to 100. So 0 will be here, 100 will be here. And essentially, we have what we term the overbought and oversold region. So the bottom will be oversold and the top is overbought, right? And what this suggests is that just looking at the terms itself, right, it's oversold. So there is a lack of sellers, right? So prices are so depressed, we're expecting a reversal. Likewise, if it's overbought, right, you come to a point where there's not enough buyers to push price higher. And hence, right, when there's a lack of buying pressure, price would continue to the downside, right? When there's a lack of buyers, you can see that existing buyers would either take profits or they will want to either manage their positions, take partials. And in such cases, right, when prices exit the overbought region, then that's when we could be seeing a potential reversal. Of course, this is the ideal scenario, right? We want to ensure that we are not just, again, trading purely based on the signals. We want to ensure that this is also in line with our higher time frame structure or our higher time frames direction. So in general, the default levels that's being used on RSI, it's 70 and 30, right? So 70 representing the overbought region and 30 representing the oversold region, right? So you can actually tailor the band accordingly, right? So imagine if 70 and 30 is somewhere here, right? If you tailor it to be 20 and 30, for example, 20 and 80, right? So you can see that this is the 20th level and this is the 80th level. So by tailoring it to these levels, right, what you're doing is that you're making the signals less sensitive. So imagine, right, previously when I have my RSI, the signals being generated, right? So if we set the rule at an exit, right? So every time price enters and exit the 30 region, right? This is a bullish signal. And then again, if price enters into the overbought region and exit, then this is a bearish signal. So this it's for the 70 and 30 band. By setting this bands further away, you can see there's a lower chance, right, or less likelihood of price entering into the zones. So essentially, when you set a band that it's wider, right, with a wider range, this is going to be less sensitive. The reason why it's less sensitive is because there's a lower likelihood, right, given that you have this wider bands, right, that you need to exit and enter. In this case, there's a lower likelihood that price would enter into the zone and exit, right? So you will have to balance between the number of signals that you want to generate at the same time, apart from just the signals, also how sensitive you want it to be. Of course, if you have a narrow band, right? So if you're looking at, for example, 60 and 40, this will be much narrower. So if you're at 60 and 40, then what happens is that if I were to draw this in a new version, right? So let's say 60 and 40, what happens is that you can see that there'll be much more signals, right? At the same time, a lot more false signals here. Okay, so this is something that we want to consider when we're setting our bands, right? The default is 70 and 30, but you can adjust accordingly, especially if you're on the higher time frame, right? If you take a look at, for example, the daily time frame, you can see that there's a lower chance, right? Especially when prices are trending strongly, right? Usually price would stay in either the overbought or oversold region for prolonged periods of time, and that exit of the region on the daily time frame, it's of a lower frequency as compared to, let's say, maybe your 1 hour or 4 hours. Okay, so RSI itself is also a leading indicator. It can provide signals, right, before price movement occur. So unlike your moving average, where it takes the average of the past X number of periods, for RSI itself, right, it can actually be used to predict price movements, right? But of course, RSI is an oscillator. So what this means is that it works better in trending ranging markets, right? So if prices are in a strong trending market, you can see that on RSI, right, it can stay in overbought region for a prolonged period of time. And any exit of the region, right, just represents a pullback before price continues to the upside. So this is something that we want to be careful of, right? So you want to ensure that when you are actually looking at the setups, right, you want to identify whether prices are in a trending or ranging market. Okay, and that's one, right? And then finally, we'll take a look at overbought and oversold values, right? So essentially, overbought, the idea is that price continues pushing higher, right? So it comes to a point where there are many buyers that are buying or pushing price into this zone, right? And the value is a lot higher. But when price exit the overbought region, right? The idea here is that when price exits the region, right, you have that lack of sellers coming in to push price higher, hence you're expecting the reversal, right? So overbought, essentially, another way you can interpret it as that it's overvalued and we're expecting that reversal. If it's oversold, it's the other way, right? It's undervalued, and there will come a point where we have not enough sellers to push price lower, and because of that, right, we're expecting price to go higher. Okay, so this is on the basics of RSI and how it works, how we can apply them. But let's take a look at RSI in terms of divergence. So for divergence, right, what we need to understand is that basically it's a measure of momentum, right? So if price on divergence, right, if you see that prices are forming higher lows and higher highs, then essentially, right, when price enters into the overbought region, you can see that if the upward momentum is to continue, right, RSI itself would probably stay in overbought region for prolonged period of time, especially in an uptrend. And the first sign of a reversal comes in, right, when we see that there is ideally, right, a break in structure, so a change, right? So price continues forming your higher highs, but on RSI, it's actually forming a lower high. Right? So this is the first sign of a change in momentum here, right? So this is on bearish divergence. Essentially, the concept behind this is that prices are continuing to form higher highs, right? You have enough buyers to push price higher, but your momentum is starting to slow down. Okay, so this is for bullish divergence, right? So usually on divergence trading, right, this can be useful for identifying short-term changes in the market, right? We also want to consider this versus trend following indicators. So one way to do this, right, it's to, again, right, I cannot emphasize enough the importance of market structure, right? So try and understand market structure first, right? Because market structure is the first sign that we could be seeing that reversal, right? If price continues to form higher lows and higher highs in an uptrend, you can see that the lows are not violated, and any pullback into support or demand zone over here, right? This, if you're to reflect it on the RSI, right? RSI could be exiting the overbought region, but at the same time, if you take a look at structure or market structure, right? Prices are just doing a slight pullback before it continues to the upside. Okay, so next we'll take a look at how we can combine RSI with trend following indicators, right? So some trend following indicators that are popular or common, right, would be your moving average. So essentially what this does for moving average is that it takes the average of the past X number of days, right? So let's say if you specify a 9 days moving average, then it basically takes, if you're on the 1 hour chart, right, it takes the past 9 periods, and yeah, it takes the average of that. Right, so it's on a rolling basis. So there are different kinds of moving average that we can use, right? So we have the moving average, SMA. So this is the simple moving average where there's equal weight given to the past defined periods, right? Whereas we have another one, which is EMA. So EMA itself is an exponential moving average. For this, right, it actually gives more weight to the more recent price. So generally, I use the EMA, right? But this is really up to your own preference. Okay, so and then next we'll take a look at market structures as well, right? So when you look at RSI divergence, you want to ensure that, again, right, market structures is in place if there is some kind of reversal, especially when there's a divergence, and this is accompanied with a change in market structure, right, that would be ideal. Okay, and of course, you want to take a look at the overall direction of the trend, right? Are we in a downtrend? Are we in an uptrend? Or is it ranging? If prices are ranging, then you can see that RSI, right, itself works nicely in a ranging market. If prices are in an uptrend, any pullback over here, right, or exit of the oversold region that we have, in this case, it just shows that it just reflects the shorter term downtrend. So in this case, right, you can see this pullback would be the shorter term downtrend that we have before price continues to the upside. So if this corresponds to that exit of the oversold region on the RSI, then in this case, right, then there's a higher chance for the bullish signal, given that prices on the higher time frame direction is showing an uptrend as well. Okay, so next we will be taking a look at how we can use RSI, right, for our trend lines. So let me just clear all these drawings, right? And at the same time, if you guys have any questions, right, do put them under the questions tab. Okay, so let's take a look at RSI divergence trading, right? So essentially, this is an example of a bullish divergence on RSI, right? So you can see here, right, there are two things to note. First is, of course, market structure, right? So when we take a look at any charts, we want to ensure that we're looking at the overall direction, right? Is it in a bullish structure? Is it in a bearish structure? Or is it ranging, right? So ranging basically just means that prices don't have a clear higher high or higher low, right? It's just moving sideways. You don't have a clear direction. In this case, right, you can see that this is ranging. Why? Because if I draw two horizontal lines across, you can see that both the resistance and support levels are being respected, right? I would consider the break above, right? So a break and close above the zone, right? So a break and close above the support resistance level as confirmation, right? So there are a few ways you can do this, right? So one of it would be looking at just the close. The other is looking at the wicks. So you can see that this wicks for me, right, they're just liquidity sweeps. So the idea behind this is that when price comes into this ranging market, right, what happens is that you have two types of people that are playing this, right? Either your straddles, right? So basically trying to buy at every support, sell at every resistance, or your breakout traders, right? So for people who are looking to buy into the support level, right, they will put their stop losses lying slightly below. And the other type of traders would be your breakout traders, right, putting their sell stops below. So if price pushes down, right, then the sell stops get triggered. So if you take a look at what we have over here, right, you can see that all the orders lying below, right, they are basically sell side liquidity, right, in form of sell orders. So if price comes into this zone, right, and you have big players coming in to buy, what happens is that they need to find these zones, right, where you have enough sellers who are willing to sell at a certain price so that it doesn't move market by a big volume, by a big change, right? So if price comes into this zone and you have enough sellers who are willing to exchange at a certain price, then what happens is that price would push lower into this zones, right? Transact at this price before it continues to the upside, because what this suggests is that basically, right, there's an exchange of hands between your buyers and sellers, right? You have big players coming in, willing to take up a huge volume to push price higher. So in this case, right, this is a ranging market, right? And what we have over there, right here, this example, you can see that this is a clear break in structure. So by structure, I mean that when price comes in to form a new high and retrace, right, then this is the new high that we have. And that confirmation of the low comes in when price, this move up, right, when this low itself break the previous high. So you're seeing it over here, right? So essentially, this is the last high that was being formed. Price came in, right, to a potential support area, but this you wouldn't have caught it, right? A lot of it's on hindsight. But what you see following which is that price broke above the structure, right? So what this suggests, right? So if you recall, in an uptrend, prices are forming higher lows and higher highs, right? So in an uptrend, the lows are not violated, whereas the highs are constantly being violated. So in this example, you can see that if price comes in and it starts breaking above this high, this is the last high. So if this low breaks above the high and cause that break in structure, you can see that this is basically the last leg of the whole move, right? So this is the last leg of the whole move. So if prices are to go through with the uptrend, what we should be seeing here is that we should be seeing price go above this zone, right? So prices shouldn't violate below this low, shouldn't be breaking below this low in an uptrend. So when price comes into this zone again, you can see here, right? So price pulls back, comes back into the demand area. It's also the extreme of this move, right? So you can see that at this area, there is some kind of consolidation. Prices are again traveling sideways before we see that break above it. So this area itself, right, would serve as a potential demand. So again, my price came into the zone. You can see this area here, right? Tap into this demand region. And if you take a look at what we have in terms of divergence, right? So right now we're in a bullish market structure already, right? Given the break of structure here. And once that has been defined, right, you take a look at the RSI divergence as confirmation. So for this, you can see that price starts forming lower lows, but RSI it's forming your higher lows, right? So this is represented here. You can see lower lows being formed, but on RSI, it's actually forming higher lows. Right, and along with that, right, this is also followed by an exit of the region, right? So if you take a look at this area, right, price actually entered the oversold region over here, and then it exited the region, right? So this is another one that you can use for confirmation. So as what I've mentioned with bands earlier, right, you can see that this is actually the 70-30 area. So this is the default setting, right, 70 and 30. So if you take a look at it from an 80-20 perspective, right, so if we decided to shift our band slightly wider, to the 80 and 20th perspective here, you can see that what happens, right? If I were to just draw a horizontal line across at 20 and 80, you can see that there's much less signals, right? So all of these areas that would have generated signals at your 70 band wouldn't have generated the signals at 80. So this is what I mean by trying to adjust this band so that you have a good balance between it being not as sensitive, so it doesn't generate tons of signals, right? Because then there'll be a lot of false signals. But at the same time, you want to ensure that it's generating enough signals. Okay, so more importantly, right, apart from just looking at RSI, right, I can't emphasize this enough, right, the importance of market structure. You can see over here, right, prior to this whole breakout or prior to this break of structure, prices were in a downtrend before that. You can see lower lows and lower highs that are being formed here, right? If I were to just mark out the peak and troughs of this moves, you can see lower lows, lower highs before we see that break in structure. And this, right, in a downtrend, you can see that even though prices entered and exit the oversold region, in a downtrend, right, when there's no sign of a change in market structure, what happens is that this exit, right, usually corresponds to just a slight pullback in price before it continues to the downside. So what's important to note is that when we are looking at the exit, right, we need to use market structure to help us understand or focus on which side are we trying to play, right? So if you're in a downtrend, you're looking at exit of the overbought region, right, to continue to the downside. If you're in an uptrend, you want to focus on an exit of the oversold region here for continuation to the upside. Okay, so this is just something for us to watch, right? So back to RSI divergence, right? So you can see that this is basically how it looks like. If it's a bullish divergence, you can see price starting to form, right, lower lows, whereas your RSI is forming higher lows. Okay, so this is on RSI divergence, right? This is a bullish divergence, right? Let's take a look at a bearish divergence. So for bearish divergence, it's the other way, right? We're focusing on the highs for bearish divergence. So in this example, you can see that it's again, right? So this is actually an example of how we shouldn't be looking at it, right? So recall, right, in bearish divergence, what are we expecting? We're expecting price to continue to the downside, right? So the idea of bearish divergence is just price forming higher lows and higher highs, RSI forming lower lows and lower highs. So that's the concept behind bearish divergence. The idea behind this is that we are hoping for a reversal in price, but again, that reversal should be accompanied with a change in market structure. If there is no change in the market structure, price could just pull back before it continues much higher to the upside, because in an uptrend, right, the assumption is that the trend will continue unless there is a change. If not, right, price will continue to the upside. So in this, you can see that we're in an uptrend, and the uptrend is defined by this break, right? So price continue. You can see that this is the first high. We saw that pullback, price pulled back into the demand zone here. And what happens following that we have this break in structure, right? So price broke above the last high. You can see this whole breakthrough. Price broke above the last high, and what we have following, which is that this is the last leg. So once there is a break in structure, right, and this uptrend has been established, we're not expecting price to break below this last low, right? Because this low is the one that caused the break of structure. So we're not expecting price to break below this zone. So you can see the pullback into the zone. And again, right, price continue to form your higher lows and higher highs. And you see this structure form again. This is the last high, right? Price came in, it broke the last high, it broke structure. So this is your last leg, right? So once there is a break in structure, this leg that's being formed, right, we should not be expecting price to violate below this or break below this level. So there are a few ways you can actually work with this, right, which is useful. One way is that if you are holding onto a long position based on other technical indicators, right, you might be entering based on moving average or entering just based on supply demand areas, looking at order flow, right? But regardless, when price comes into this zone, right, you can actually also trail your stop losses based on market structure. So in this, the same example, right, if you're holding onto a long position and you're seeing that break in structure here, right, you can start trailing or shifting your stop losses up to protect the position, keeping it below this low. Okay, so just something else to note. But in this example, right, let's focus on the divergence. So in this case, you can see that we're in an uptrend, but what's also worth noting is that price came in, it forms equal high, you can see here, or rather higher high, right? So marked out by this line. And then on this area itself, you can see that RSI actually forms a lower high. So this is a valid divergence, right? Because price forms a higher high, and then we see equal lower high here. But what happens following that divergence is that you can see that this is just a slight pullback, coming back into the low again, right? So in fact, if I were to zoom in, you can see that this area, right? This area here, price actually broke above this structure. So again, right, this is the last leg of the move here, right? If you want to focus on the lower time frames, you can over here. But what we are seeing here is that you can see following the divergence, right? Any pullback in price in an uptrend, right? It's just any divergence is just represented or corresponds to the slight pullback in price before price continues to the upside. And this makes sense, right? Given that on the higher, on this, the general direction that we have, right? We are in the bullish market structure. So then another question to ask yourself is that when would you consider this to be valid, right? When would you consider this to be, this divergence to have a deeper pullback, right? One way would be to look for a break of the last support level or the last low that broke the high. So in this example, the same example that we focus on here, right? Focus on this portion of the chart and this portion. You can see that again, right? The last break in structure happens here. Price broke above it, pulled back. So this is the last low that we have. So recall in an uptrend, the lows are not violated. And once price breaks below the low, right, there's a first sign of a change in direction of the trend. So using the same example, you can see that this is the last low. So if we want to see a deeper pullback, right, a bearish move, what should happen first is that the sign of a change in trend should first happen on your lower time frame or on this time frame, right? You can see that price should be breaking below this low before continuation to the downside. This would then correspond to that bearish RSI divergence, right? If not, what we're seeing over here, this bearish divergence is just accompanied with a slight pullback before price continues to the upside. Okay, so in the previous example where we saw on bullish divergence, you can see that that's in line with the general direction of the trend. But in this case, this bearish divergence, right, it happened in an uptrend. There's also no market structure for confirmation. So it's just something for us to note, right, when we're looking at divergence. Okay, so as much as possible, try and incorporate it with market structures. So another thing that we want to look at would be on trendline breakout, right? So there are a few ways you can interpret RSI, right? Apart from looking at just the zones, the bands that we have over here, right? Another thing that you can look at for RSI here is to look at trend lines. So you can see this example, right? This is just a simple example on how we can use RSI in terms of trend lines and breakouts. This is an example on dollar CAD. I believe this is on the daily time frame, right? So in this case, you can see that RSI, right? Essentially what we have over here is that we have an ascending trend line that's formed and price respects this region very nicely. So for me, for it to be considered a valid trend line, I need at least 3 taps, right? So if price comes in and we see 3 supported points, then this is a valid trend line that you can extend across. So what we have in this case is that you can see that this RSI, right, this trend line is accompanied with the same movement over here, right? So you can see price forming again higher lows, higher highs coming into this zone before you see that change in structure, and price broke below trend line, right? And if you take a look at support resistance concepts, you can see that this was the last support and resistance area as well, right? So price came in, we saw that acknowledgement of the zone before it continues higher, and then coming into this area, you can see that there's a breakout and retest of this zone, right? So price broke and closed below, retested this area as a resistance before it continued to the downside. And what happens after is that you can see that RSI also reflected this change, right, with the break of the trend line. And accompanied with that, right, if you look at supply demand zones, you can see that supply chains are starting to form here. And even with the most recent move, right, if you look at structure, you can see lower lows and lower highs being formed. Okay, so how you can use RSI trendline breakout, right, especially on the higher time frame, it's that it can be used as an overall direction, right? So if we are seeing a trendline breakout over here, right, then what this suggests, right, following the breakout, which we have here, you can see when RSI break and close below, then this shows us that there is room for more downside, especially because there is also a change in structure on change in market structure, right? You can see at this move itself, if I were to draw the highs and lows, you see the last low it's being violated. So if I were to draw higher lows and higher highs, you can see this is the last low it's being violated here. And then we have that breakout pullback, and then accompanied with that, right, if you're on the lower time frame, you can see that supply regions are starting to form. Okay, so let's take a look at dollar CAD chart, right, before we get to the end of the session, right? And if you guys have any questions along the way as well, right, do put them under the questions tab. So let me just bring out the chart. Okay, so this is the RSI chart. Let me just remove all of the drawings here. Right, so look at what we have here, right? So you can see that the first breakout and retest, saw that first break and close below over here, this region. Right, so let me just zoom in, right? So this is on the daily. Let's go down to the 4 hours time frame. So in the 4 hours, you can see that there is a clear breakout and pullback of the zone, right? And if you take a look at support resistance areas, you can see that we have this consolidation here as well. Just put this. Okay, so you can see that again, right? Price came in, we have that rejection, price broke above it, retested as a support. And if we were to project this level to the right, you can see that we have that hesitation again coming through here, right? So price broke and closed below the first time over here. And then what happens after, it's that this area, right? When demand fails, it becomes a supply region, right? So recall in our demand supply sessions. So when demand fails, it becomes a supply. So you can see over here, right? This is the last candle. This is the last candle that broke below, right? That held below before we see that breakthrough of the gray zone that we have over here. So this would then be a supply region, right? So the supply area here. Okay, so depending on the time frame that you want, right? If you're on the lower time frame, then you can see that it'll be much narrower. In fact, you might even miss this entry slightly, right? But you can see this area, right? So price follow through, came into this zone, right? Just missed it slightly here, right? And then just continued to the downside. The next break in structure comes in here. You can see this area on the 4 hours. Price broke below the low, right? Broke below structure. And this, right, if you take a look at RSI, you can see that this is accompanied with this area here, right? When price broke below the structure, you can see on RSI, right, we are also seeing a trend line breakout. So again, this region, you can see this area, right? So price continues forming a higher low, higher high. And once there's a break of your RSI over here, this is also accompanied with a downside that we're seeing on the 4 hours time frame. Okay, so right now where we are, right, in terms of the break in structure, you can see that this is the last leg on the 4 hours. This is the move down, right? So we're in a bearish structure. So if price comes into a resistance area over here, right, and this is accompanied with divergence in RSI, right, and even an exit of the region, right, then we could see more downside. But until that happens, you can see that if you just focus on the most recent portion of the chart, right, this move up, right, so this is the 4 hours. We are seeing that strong impulsive move down and that pullback. But within this pullback zone itself, if you go down to, let's say, the 1 hour or even the 15 minutes time frame, you can see that within this whole pullback leg that we're seeing here, you can see this whole pullback leg, it's actually forming bullish structure, right? You see clear higher lows and higher highs that are being formed, price continuing on the upside. So what this suggests is that if price does come into a resistance area, that it should respect, right, or it wants to respect. And in this case, right, the first sign of reversal usually comes in on your lower time frame, and this will be reflected on your RSI. Okay, so if you take a look at 1 hour time frame on RSI, right, this is an example of a bearish divergence. How so? Prices continue forming higher highs and higher lows, but on your RSI, it's actually forming lower lows and lower highs. You can see it here, right? It's forming lower lows and lower highs. So in this case, right, what you're waiting for, if price does come into a resistance area, you want to ensure that there is a clear break of structure, right? So if I were to just put this levels, you can see clear higher lows, higher highs, right? This is the last low that we have in terms of structure. So you see the highs, the lows, right? And then what we have over here, strong push up, price came in, form a new low, broke above the high, right? So in this case, right, if price breaks below this zone, right, then there is a further confirmation of a move down, right? If not, you can see that price will just continue higher, even though there is divergence, even though prices are already in the oversold region, overbought region here. Okay, it exited the overbought region, but you can see that based on structure right now on the 1 hour time frame, right, still holding above the last low that broke above this high. So we need to wait for a break below the structure for confirmation to the downside. Okay, so that's what we have for today, right? I see that we have no other questions, right? So if we have no other questions, let me just check. Okay, so yeah, with no other questions, right? So then that's what we have for today, right? So in summary, we covered the basics of RSI, how we can use them. We talk about divergence trading, right? But it's important that when we look at divergence, we want to ensure that we're also combining them with market structure, not solely trading just with divergence, because in extreme market movements, right, price could just continue higher. So in the example that we saw earlier, right, even though we are seeing that bearish divergence, but you can see in terms of structure, has yet to show bearish signal. And then we also look at RSI, right, in terms of how we can use trendline breakouts, right? So in general, right, for trendline, try and find at least 3 valid points, right, that's been supported prior to the move, right? And that would be a valid trend line. If price breaks below an ascending trend line, like in the examples we saw earlier, then you can see that it can be interpreted as a bearish signal. But again, we want it to be accompanied with structure, market structure. Okay, so if we have no other questions, right, that's all we have for today, right? Thanks everyone for staying with us till the end, right? As always, for tomorrow, we will be doing our live analysis session, right? So you can sign up for it at vantagemarkets.com/webinars. If you have any questions, right, do email us at support@vantagemarkets.com. So with that, we've come to the end of the session, right? Thanks everyone. Have a great day, and we will catch you guys again tomorrow.